Thank you for watching today, spending 4 minutes on this video regarding different methodologies that we have to make life purchases throughout our lifetime. Okay. And we're going to dive right in. So I'm going to get into it. The first way that most of us do it is we are, in fact, borrowers in our society. So this first line that we have is basically this horizontal line, I should say, is even Steven. So, but most of us, we borrow money, okay? And then over the course of time, we pay it back to get back to even Steven. And then we borrow money again for the next purchase. And over time, we pay it back. And throughout all of this, guess who's making money on those funds that we're borrowing? The banks. The banks are making money, and we're just getting back to zero and maybe scratching and clawing and saving some money along the way. So that is one method, and that is the most common method in most American households. And the next method is a little bit better, and it is folks who are savers. So again, we have this line that we're starting out at, and that is our even Steven line, okay? And usually over the course of time, we do a little bit better here. We're not paying the banks for borrowing those funds over the course of time, but we're saving, and then we're making a purchase. And then we're getting back closer to that line. Then we're saving, and then making another purchase. And we acquire some assets along the way. So we're climbing a little bit steadily, and maybe we're saving some money. So it is definitely better than being a borrower. And let me get out of that. And the next one is going to be what we want to focus on, and really the best way of all. And that is to become our own money and bank warehouse. Okay. And so over this, we do have some pain in the first year, 2, 3, could be up to 4 years. And we have to be disciplined during that time and throughout the entire process. But over the course of time, this money is going to continue to compound monthly, yearly, and earn money for us, even as we're borrowing against the capital that we have in this asset. Okay, so once we get that cash value build up, we can borrow against it to make those life purchases, whether it's automobiles, whether it's education, college education, whether it's a wedding, whether it could be a plane, it could be cash flowing assets like real estate, crypto, etc. But even though we're not borrowing our money, but we're borrowing against the capital that we have in that, much like a home equity loan, if you will. But over the course of time, we're going to be in a much, much better position financially, because that money, even though we're borrowing against it, continues to compound month after month, year after year. So it's a far superior method than the first two. So that's it. Thank you for joining us. If you want to learn more, if you want to schedule time with me, hit the link below to schedule time to find out how you can be your own bank.